Welcome to the AI for Career Success video overview by Curt Robbins, where we help you get smarter than your competition. The technology sector has long been a reliable engine for growth, but recently it's hit some significant turbulence. So today, we're going to examine the events that have shaken things up and explore the different theories about what this all means for the future of software. So, where did the first alarm bells start ringing? Well, it was a key industry benchmark. According to analysis on LinkedIn by Caleb Swainston, Goldman's software basket, which is a collection of really influential software stocks, it dropped a staggering 6%. Now, that's not just a minor dip. That was a clear signal to investors that something was wrong.
And this wasn't just happening in one isolated corner of the market. As Andrew Barker reported on LinkedIn, the shockwaves were felt pretty broadly. The NASDAQ composite, for instance, had its worst two-day pullback in almost 2 years. The S&P 500 and the Dow dropped too. And even the giants weren't safe. Alphabet saw its shares fall, which is interesting because it happened right after they announced they were doubling their capital spending on AI. Qualcomm also dropped on a weak forecast. So all of this points to a pretty deep anxiety that was spreading through the market.
Okay, so amidst all that panic, a different interpretation started to take shape. Some experienced market watchers began to suggest that maybe this wasn't the beginning of a total collapse, but something more predictable, a cyclical shift in the market. And here's where we need to understand the distinction between two very important terms. A liquidation is a full-scale collapse. It's driven by fear, and everybody rushes for the exits. A rotation, on the other hand, is a much more strategic movement of capital. As one sector cools off, smart money starts looking for the next area of growth. So you see, it represents a recalibration, not a complete catastrophe. Mike Larson of Money Show really articulated this perspective perfectly. He argues that when fear takes over, people make irrational decisions, and that creates openings for more disciplined investors. The idea here is that we're not seeing the end of the story, just a fundamental change in the plot. But if the story is changing so dramatically, what's the new plot? Well, the catalyst seems to be a very specific technological leap forward, one that's been given the rather dramatic nickname, the SaaSpocalypse. As technologist Vinay Simharaju Pieriraju put it on LinkedIn, this term has officially graduated from being online jargon to a force that's actively shaping how the market behaves. This isn't just hype, it's having a tangible financial impact. And the scale of that impact is, well, it's breathtaking. In just a single 24-hour period, $285 billion in market value was erased from tech stocks. And this massive sell-off was a direct reaction to one single event, the release of 11 new open-source plugins for Anthropic's AI Claude Cowork. This really represents a major paradigm shift. For a while now, we've gotten used to AI as an informational tool, a chatbot that answers our questions. But these new plugins are transforming AI into an agent. It no longer just gives you information. It can autonomously execute complex, multi-step workflows. It does things. And that right there is the threat to the entire software as a service, or SaaS, industry. Think about it. Why would you pay for dozens of different specialized apps if a single AI agent can do all those things for you, like cleaning data, generating reports, or managing legal documents, in just a few minutes? This directly challenges the core business model of a huge part of the tech economy. So the market saw this threat to the SaaS business model, and it reacted swiftly and decisively. But what if that immediate reaction, as dramatic as it was, missed the true underlying danger? This is the critical question we really have to consider. Was that $285 billion sell-off a rational response to a business model disruption, or was it a panicked reaction to just the symptom of a much deeper, more complex problem? According to a very sharp analysis by Caleb Swainston, the market's focus is misplaced. He argues that while investors correctly identified that there was a threat from agentic AI, they fundamentally misunderstood its nature. The risk isn't just economic. And this brings us to the core thesis of this whole situation. The real danger isn't displaced software. It's a profound and dangerous absence of accountability and governance. This table lays out the paradox really well. On one side, you see the incredible power of agentic AI in regulated industries. It can triage legal documents, track compliance, and so on. But on the other side, you see the governance nightmare it creates. When an autonomous agent makes a mistake, who's accountable? Who bears the regulatory liability? We've seen this exact pattern before. During the financial crisis, the robo-signing scandal emerged because lenders automated signature workflows to speed things up, but they failed to build in the necessary governance layer. The result was a systemic failure that cost the industry billions and took years to resolve. Agentic AI presents the same kind of risk, just on a much, much larger scale.
And this is the central point of Swainston's argument. Wall Street panicked about the plugin, the piece of tech threatening software subscriptions. But the real systemic threat is the deployment of this powerful technology without any framework for accountability, especially within highly regulated fields like finance, law, and insurance.
This brings us to the ultimate takeaway from all this market turmoil. The situation really distills down to a single, critical question that every leader in every organization needs to be confronting right now. This is the defining question. Teams that are focused only on capability, on what can it do, are racing toward the same cliff as the robo-signers. The winning organizations, the ones that are going to survive and thrive in this new era, are those that lead with the question of governance. Who is responsible when it's wrong? Because in the world of agentic AI, that is the only question that truly matters. Thank you for watching. This is where we teach you AI and help you get smarter than your competition. If you like these videos, use the QR code at the beginning or end of this video to buy us a coffee. We encourage you to subscribe to the AI for Career Success YouTube channel. Please like, comment, and share to help us reach a wider audience.